Basically, the shortage of silver has built up over a long period of time. I mean, if you look at the Silver Institute's estimates of supply and demand, you can see that it's been supply deficit for, the last 5 or 6 years. And it's in supply deficit this year. And the difference is always made up on the Silver Institute's calculations by drawing down on investment stocks, what they call investment stocks. We've come to an end of that. And, the thing that makes it so difficult, I think, is you've got this very limited liquidity. The vast majority of silver in the LBMA vaults is actually for silver ETFs. You look at the big silver ETFs. I mean, basically that accounts for most of it. So the liquidity is actually very, very low, what's actually available. So what we see is authorized participants, as they're known as, the big banks, if you like, who will be listed on SLVs, for example, prospectus. What they can do is they can sell SLV stock for physical. So what they're doing is they're going out and they're borrowing silver, SLV stock, from pension funds, insurance companies, wherever they can get hold of it, and paying a huge, great premium to do it. And actually, it's that there isn't any supply of SLV stock anymore, but they then sell it into the market for bullion and then deliver it, and they're left with a short position. They've got to cover that at some stage in the future. So, this doesn't actually resolve the problem. It just deals with one bank's particular position, short term. It's rather like, payday loans. You run out of money and you've got the bills to pay, and you're not going to get paid until next Thursday or whatever. So what do? You go out to payday lender and you pay 120% or whatever the figure is to, finance your position for 3 days. That's all they're doing. This is just, storing up continual trouble in the market. I just don't see how this one can really be resolved, because the problem is that all this is going into secure hands. I mean, people are hoarding the stuff effectively. And now, because this is so public, people are subscribing for, guess what? ETFs, silver ETFs, which is reducing. I mean, the silver, the managers of silver ETFs they've got a problem, because they've got to now try and find some silver. There's very little available in the market. So all these talks about flying silver from New York back to London, I should think most of that silver is spoken for by the ETFs. I mean, when's it going to end, Alex? I just cannot see. This squeeze, I think, has got a long way to go, I must say. I mean, the other thing is that you're looking at a gold to silver ratio of around about, it's just under 80. That is very, very high, particularly if you take the view that we are coming to the end of a fiat currency system. Because the other side of the end of a fiat currency system is the repatriation of gold into its rightful position, which in everyone's common law is final settlement without counterparty risk. It is the true money. And silver has a subsidiary role in that. So we're likely to see the gold-silver ratio fall very substantially. What does that mean? It means the silver price goes up to 100 quite easily. I mean, don't hold me to a particular figure, but, for example. And I think the market is getting the sense of this, and certainly for private investors who feel that they might have missed the gold boat, having maybe taken profits at $2,000 or $2,070 when you remember that was the top of the trading range for some time, regretting it and thinking we've got to get back in. But how do you buy gold at $4,130 when you've sold it $100 or $1,000 or $2,000 below the current level? This is a psychological nightmare for investors. So what do? Buy silver. It's far cheaper. That way you get back in the ride, with a little bit of self-respect preserved. So this silver thing is actually very, very serious and continuing. What we're seeing in the markets at the moment is the squeeze on lack of liquidity. It's very obvious in silver. It's less obvious in gold because you're not getting the high lease rates and backwardations between London and New York. But nonetheless, there is a squeeze in gold because following earlier this year, when masses of gold were taken out of the Bank of England vaults, basically, to arbitrage into New York, a lot of that was leased gold because the principal storers of gold in the Bank of England are other central banks, and the Bank of England has always encouraged other central banks to lease their gold as part of providing liquidity in the London gold market. The press, everybody knows about, that there's a shortage in the physical and the silver market. I mean, they come up with different conclusions as to how to resolve it and what is likely to happen and all the rest of it. But this is a new thing that's become very public, and it must make it very difficult for the authorities to manage a crisis, if you like. I can't see really how this crisis can be easily managed. I mean, in the past, there wasn't, if you like, the sort of current overall level of indebtedness. You had speculators, if you like, driving prices. But if you look at the open interest on Comex, the speculators are not there. I mean, this is all short squeeze. And how do you remedy a short squeeze? Well, you supply some physical into the market. But who's going to supply the physical into the market? No, not even the authorities have got it. You could argue that the United States might have some concealed silver reserves, but that's just gone onto the critical minerals list, or at least it's been recommended, so it's unlikely that the US government will come to the rescue of London on this one. China, are they going to come to the rescue? I mean, in the past, they have suppressed the price. Of that, there is absolutely no doubt. But it seems to me they've withdrawn from the market. And not only have they withdrawn on silver, but you can see from their policy on rare earths that generally they're withdrawing from supplying needed metals and commodities from the West. So you can see that suddenly, where is it going to come from? The Chinese central bank handles all the state's silver purchases and sales. It does that anyway, but it doesn't. This is not something that they put on their own balance sheet. But other than that, I think that central banks are basically out of it. I would think that governments may or may not accumulate silver for whatever purpose. I can see, for example, perhaps the Indian government might be interested in accumulating silver because it is trying to develop a solar, photovoltaic solar, industry thing. But I would think that rather than the Indian government actually doing it, I think they would, their approach, if you like, is to encourage the larger multinational Indian-based corporations to develop their photovoltaic industry. So that certainly is happening with outfits like Reliance Industries, which is a very, very big Indian-based business.